All right, yeah, so Edward would like to see an example of pulling a profit target in case there's a pullback. Yeah, so that is very specific to how you define a pullback. Yeah, so Edward, why don't you kind of explain, how you're defining a pullback, because to answer that, it's going to be very specific to how you're defining a pullback. Yeah, so a pullback is going to have to be defined by using an indicator to identify a pullback, or a bloodhound signal that defines a pullback. But to go into it, but just to kind of cover the basics here, let's go into our profit target. So let's say, we have this 100 tick profit target. And so, we might want to pull that profit target in. And so to do that, you would use the trailing actions, right? So we can define, some indicator kind of conditions here, that are trying to identify what a pullback is. So, all right, yeah, okay, good simple example there. So Edward's saying, let's say, if price touches the SMA 14, right? So you kind of have a fast moving average, and so if price pulls back and touches that fast moving average, that could be our definition of a pullback here. Okay, yeah, so Edwards is clarifying. So once that profit target is pulled in, then he wants to keep it there. Okay, yeah, so in the trailing actions tab here, let's see, we need to create a custom trailing rule here. And we can see that the evaluate using is action closest to price, right? So, what is action? Well, remember, the action column is what sets the new price for the order, right? So the action column is normally what sets the price for the order. So another way of rephrasing this would be, order price closest to the market. I guess, closest to price. Yeah, I guess it might be better to say closest to the market, right? So just replace the word action with the new order price. So whichever new order price, is closest to the market, right? So our evaluate here is already set to what we want for pulling in a profit target. And so we're going to add a new trailing rule here. All right, so we're going to pull in that profit target. So the trigger, let's see, that could simply be price versus indicator. So let's see here. So for input A, now of course you have to decide which prices need to touch your moving average. So to be more liberal, let's just say on a long trade, if the low price touches our moving average, right, that's close enough. And so if it's a short trade, then if the high of the bar, pulls up and touches that moving average, right, then that's our condition. So, and then for the indicator, there's our SMA 14, just a default indicator. So we'll just go with that. And now the mode, let's see, the mode is going to be, so if the low price touches the SMA, then basically the low price is going to be equal or below the SMA, right? So for a long trade, we're looking for A to equal or go below B, right? So the low price either needs to equal or go below the SMA. And so for a short trade, it's going to be the opposite here. So let's reverse that. All right, so if it's a short trade, then if the high price is equal or above the SMA, right? That's our pullback condition there. There we go. So basically this price versus indicator is, one simple way that we were able to kind of define the market pulling back, making a pullback there. And so once this situation, this condition happens, now we need to decide where do we move our profit target to, right? So we're going to move our profit target to, open this up, and yeah, that's basically, the big mystery there is where do we want to move that profit target to. We could, something simple would be, all right, we could take the entry price and just, define a new offset. So we could cut that profit target, in half. So we could change our profit target from 100 ticks, to 50 ticks, something like that. So, or we could do something like, let's see here. We could take the closing price of the bar, right? So when our little trigger condition happens, right, when our pullback happens, then we could take the closing price of the bar and add so many ticks to the closing price of the bar. So you could set that profit target kind of relative to, where the close of the bar is, where the market currently is at. We could, you could do something like that. Yeah. And then that's it. So since Edward only wants the profit target to pull in just one time, that means there's no repeat, right? No repeat. So once this kind of pullback condition happens, then the profit target is moved and this trailing rule is done and over with. It'll never execute again. It'll never execute during the life of the trade, right? Of course, once another trade is opened, this trailing rule will activate again, of course. So, but yeah, as long as, your repeat is set to no repeat, then this is a one-time action, a one-time trailing rule there. All right, so there you go. So the two key components here is, defining your pullback condition, and then the second one is, determining, where you want that profit target to go. All right, Edward?